Hey, good afternoon, everybody. This is Dennis Wilborn, the active trend trader. I want to welcome you to On the Radar. This is normally a live market update we do on Tuesday, Wednesday, and Thursday at 12 noon Pacific time. For the final hour, we spend about 15 minutes together. We're going to be talking about what's happening with the indexes, and then moving on into a couple of stocks that we might want to be paying attention to as the trading week goes on. Normally, as I said, we do this live on Instagram. However, today we had a little bit of a connection and a bandwidth issue, so we're going to do it as a recording. And so, hello, everybody. Let me know what you think about our new camera. I just put that on. I kind of like it. It doesn't make me look any younger, though. But hey, let's jump right into today's market. Since the market has closed, we do have the benefit of knowing exactly what the final candlestick was for the day. So if we take a look at the S&P, using the spiders as its surrogate, we see that today's candlestick was not quite, but is really close to a bearish engulfing of yesterday's hanging man. Now, of course, from a candlestick perspective and candlestick discipline, yesterday's candlestick was a hanging man. However, with prices moving up above today's high, or yesterday's high, that voids that as a reversal signal, as a bearish reversal signal. However, it basically more like a quasi, you have to consider it because it did cover half of today's body. So we do have to count it as a dark cloud, which is a bearish reversal signal. Where do I anticipate things going on the S&P? If we do reverse from here and start to fall, look for things to move all the way down to the moving average that it respected most on its trip up, on its trip up the. And which one was that? Well, it was respecting either one of two, the 20-day, which is right there, or the 34, which is this dotted line just below that trend line, as we see, because it's been in a nice uptrending channel. And so with the prices close to the top, that's when we'd be looking at, doing some kind of, either one, doing nothing, waiting for it to pull back into the trend lines for a potential bullish trade, or two, we could, basically do a little bit of I would look at doing a bearish call spread, a bearish call credit spread to take advantage of the prices probably topping off right there and falling back down. So that's what we're looking at with the S&P. Let's go down here to the NASDAQ, and we'll be looking after hours. Since it is after hours, price action is up a little bit. We'll take since we are taking a look at that, what I'll do is, if I can, I'm going to move this over and I'll have to move it right back. Now, basically, I just take this off here. Detach. There we go. Because we had a couple of stocks report today, and we'll see if what happened after they reported. I think I think Amazon reported today. Nope, no, it doesn't. It did not report today. It's basically out on the 2-2. Did Apple report today? And the answer to that question is no, it's tomorrow also. What about Facebook? Facebook report today. There we go. No, also on the 27th. Got a bunch of stuff reporting tomorrow. So tomorrow should be, after hours, should be a really interesting time in the market. So let's get on back to the Qs to see what the Qs have in store for us. The Qs. closed at 328.59, which was down slightly. Again, the bearish hanging man that happened yesterday is still intact. Price action stayed below that, so it's still, and so we're now getting a bearish hanging man, which is a reversal signal, and we get a spinning top. So price action is not moving up, really strong. The other thing that kind of drops tomorrow also is the Fed has its reports out tomorrow about what it's going to be doing with interest rates. Expected to leave them, unchanged. Still waiting for the other shoe to drop with respect to the executive orders that President Biden has been passing. I don't think the economy has totally digested what's going on there, and so we'll see if that works out to be a negative or a positive going forward. Again, nothing to write home about. No specific signal to say, hey, jump on a trade to the downside. The part of the negative side of this, the bearish side, is it popped up out of a trading channel above it, and so this whole area right in here is typically oftentimes followed by what? A more severe pullback. The other thing that is IBD talked about a couple of weeks ago, or actually just last week, price action had pushed up, and it was like 8% above the 50-day moving average. I use the exponential moving averages, and I don't think it's quite that much right now. Let's take a look. So it's about 6.37 on a exponential. It was about 8%. So what they anticipate, of course, is that being a predictor of a deeper pullback. Where to? Well, look for a pullback back to the 8 to the 20. As I covered in the live video, one of the things, if you're looking for a pullback into the moving averages, a lot of time, beginning traders or they will look at wherever the moving average is, like here's the 8-day, and it's sitting at 322.70, and they'll say, okay, if I pull back to the moving average, and that's what they'll take as their value for the pullback. However, here's your tip for today. Much like if you were shooting a moving target, you want to lead the target to be able to get your shot in properly. So I just do a little bit of geometry, if you will, here. I draw in a line parallel and to my existing trend line. So that's approximately parallel. And then over the next few days, if this trajectory stays the same, it tells me tomorrow my 8-day moving average is going to be up here about, 324. The day after that, it's going to be up to about 326. And I can do the same thing for the 20. And I want to know actually what the 20 is doing more so than the 8, because the 20 is the line that's been hanging in best. And sometimes you don't get them exactly right, but it's an estimate of where's the 20 going to be tomorrow. The 20 tomorrow will be right there at 318. The day after that, 320, and on up. And that way I can plan and program, I have a pullback, and especially the night before the moving averages actually move, I can have those all laid out and get an estimate of where I want to lay in a conditional order based on those trajectories. So that's what we're looking at with the Qs. I would look at what I may do this evening is I may put out an alert to say, hey, if price action stay below the 330 level, and after hours they're actually back up to yesterday's high after hours. But I'll take a look at it a little bit later today and may put in an order to do a bearish call spread or sell or buy a put for Qs to pull back where? Back into the moving average or back into this breakout area about 319. Recognize that 319 level right there, that is about $9 away. So that could lead to a very profitable trade for us if everything gets into sync. Number three, The Russell. Now, the Russell has painted us a little bit more of a bearish picture. And so with that said, we had a spinning top bearish harami yesterday. We have a high up here at about, let's say, no, let's just grab this. The high is at 217.91. We had a bearish engulfing pattern today with price action stopping square dab right on top of the 8-day moving average on the way up, on the move up. Let me show you what has been happening. On the move up, the price action on the Russell really respected the 8-day moving average until it did this little flag back to the 20 and then moved up. I would be looking for a potential flag back to the 20 and a move up. Use the same trick that I just showed you on the Qs to establish where approximately the moving averages will be, moving forward. As you can see, this purple line up here, which is the 8-day, is starting to tweak over just a little bit. However, still tomorrow, it's going to be up at about the 213.71 level. And again, looking for a pullback either to the breakout area here, 209, or to the approximately where the 20-day moving average will be tomorrow, 208. So I like this to basically do a downside trade. I look for a pullback up to about 214, 214.50, and then look at selling out 2 weeks from now. It would expire February 5th, selling a bear call spread, taking in that credit, or you could actually also do a real quick turn swing trade on a put. I would go in the money or at the money with my put, again, out approximately a week and a half, or I could even go 3 weeks from now. One thing to remember, though, is the week, option expiration week, where the monthly expiration, monthly expiration happens the typically the third Friday and Saturday of the month, tends to have an upside bias. So I'd be careful buying any, downside option, or so, that would basically be a bearish type move, or a bearish. I wouldn't be buying puts that expired the week of monthly expiration. So that's what we have for the IWM. So I wanted to also show, and during the live show, I did show a couple of other stocks that we need to be keeping our eye on. One of them is we'll go back to, I'm going to show you TWLO first. TWLO, I want to look at TWLO as being a potential long trade. And as you can see, I already left these in place. I'm going to erase these and basically show you what I put in previously. How many of you are familiar with trading with, are utilizing the time extensions on the Fibonacci's, the Fibonacci time extensions? They can be very beneficial to go along with the price action, projections or extensions on with the Fibonacci's. How do you use those? I look for an area where, I look for something with symmetry. Symmetry of both price, in other words, the pullback being equal, and then symmetry in time, in that the move taking approximately the same amount of time. And here's a perfect example on this, and let me blow it down. As you can see, the TWLO has done a really good job coming back to the just above the 50-day moving average. May do the same thing here, and then getting a bounce from there. And so what I'll do is I will just basically grab my Fibonacci extension tool, and the extension tool is this one that looks like it's got a little zigzag. So I grab that, and I go and I want to measure from my low, past high to low, extend it up, and then that gives me a projection. And as you see, the two price, this is kind of a bearish move to the downside on TWLO before earnings. Earnings come up when? Earnings come up on, right here, on 217. So this may be a prerequisite to getting ready for a pre-earnings run. Of course, it may also just be a, hey, I'm falling from the sky, so get ready to short me. But as long as the moving averages are all pointed in the up direction, we don't have that trigger yet. So what I'd be looking at is since we violated the 100% extension, so it has met symmetry with this mark right here. And it did that in 2 days. Where's the next opportunity for it to turn around? Well, down here at either the 1272 or the 1618. There's where I throw in the time extensions. There you go, Fibonacci time extensions. And again, it is based off the Fibonacci concept that symmetry repeats. So in this case, I want to go ahead and grab the same high that I did last time, same low that I just did last time, and I'll go back up to the same high for the projection of the extension. And I'm going to basically go over here, and if you hit the control and then left click, you can get rid of some of these vertical lines that I'm not interested in. I am interested in it taking approximately the same time to go that same level. Now, as you've seen, we are taking the same time to fall a certain amount. Now, what we can do is, what numbers am I interested in? I'm interested in, right here, the 78% extension, which will happen on 2/2. So February 2nd is when that'll happen. And then the 100%, which happens on 2/3, the very next day. Now, oftentimes what we'll see is the price action and the time action will move down, and they will intercept the horizontal line, which is the price. And so if it gets down to the 1272 and it happens to be about 2/2, I would say, okay, this could be very well a point where time and price align for a potential rebound. The next area down, if I get down lower than a 1272, I would be looking at either this day, the 2nd, or the 3rd for a potential bounce. And that would also coincide with what, always look to your left, a strong level of support where it broke out of and bounced before. So if you've never learned how to use those Fibonacci time and price extensions, you can. I did two really good recordings on my YouTube channel, Market Tech Talk, that talk specifically about how to do that. So that's what I'm looking at. TWLO, the two big, large down days, they may basically rearrange my thinking on this, but I'll look at where is the action value zones where prices could turn around, because I'm certainly not going to buy a big red candle like that with no reversal on it whatsoever. So let's go over to the other three stocks that just keep your eye on. Zoom. Zoom's looking pretty good to the downside. It came back up here. We could almost put in a trade on Zoom this evening. As a matter of fact, I will probably do that on any time I've moved back up into the midsection of today's big red candle. Look what happened. It has basically been following this downtrend line, and it got bounced down on it 3 or 4 different times, and now has reversed down to the downside at support. So what I want to do is, if it bounces back up into the moving averages, that's where I would want to plan a downside trade with either puts and or a call spread, in other words, or a put debit spread. Either one of those, depending on how you want to measure risk. I a lot of times like the debit spread because it basically, I pay my risk up front. But other people like, hey, I like to do the call because I like the cash coming in my account. You know, it's one of those two. I always try to do my spreads where I have about a 1-to-1 ratio, win-loss, the profit to loss, 1-to-1, where if I risk $1, I'll gain $1. And so that's the way I try to set these up. And what's the other one we have going on here? The other two are ABGO. Now, I'll put ABGO here later. The other one is LITE. And this isn't Miller Lite, this is LITE. So LITE, doing a similar type thing. Really nice move. It broke down, it rallied up. The rally appears to be failing. Do we still have time, prior to earnings to make this work? I don't know. I mean, earnings are coming up on 2/2, so that's sometime next week. Might be able to work some kind of a downside trade on it, probably down to about the 93 level just this week. But I would be looking at, again, some kind of a retest into the middle section of today's candlestick or to the high, about $99. And that's where I want to trigger in a trade. And last but not least, we did trigger in a trade on AVGO today. And this was sent out to all premium members. And here was the way this set up. We basically had price action roll all the way up to hit the 470 level yesterday. I said, that is not quite a hanging man, but it's pretty darn close. Clearly, it did not get much above the high from Thursday of last week. So I said, okay, here's the way we set up this trade for our premium members. If we get back up into the 46.50-ish level, we're going to basically sell the 465 call by 470 call that expires, I would say next Friday of next week, with the expectations will drop on down into about the $54 level or even the 456 level. And by that time, and we'll take profits when, so we were trying to get filled at $2. We got filled, we were trying to get filled at about $2.30 to $2.50 credit. Got filled a little bit better than that for about $2.70. And so now we have a better than 1-to-1 ratio. I will take off profits. I will buy back my credit spread. I'll buy back part of it when I get about 40% of my potential gain in place. And I'll then try to let the rest of it ride, making what the remaining contracts break even, and let the rest of it ride till I get about 70 to 80% of my potential profit in place. So if that makes sense for you, if you would like to learn more about the kind of trades that we are doing with active trend trading, I encourage you, hey, check us out. There'll be, if you're joining us on Instagram, go to the like us, follow us on Instagram, mark, and save this page so you can go back and refer to it. Go to my bio, and there you'll have the various links to the various things that we offer at Active Trend Trading. If you're watching this on our YouTube channel, Market Tech Talk, I encourage you, one, subscribe, hit the bell. I'm continuously updating our training videos, our free training videos on YouTube. And we encourage you, hey, come check us out, ask questions. Eventually, I'd like to get you plugged into our top 5, or what's new that we're really excited about coming down the line is our autopilot leveraged ETF service that we're going to launch over the next 2 weeks. We're anticipating similar results, if not better the results than we did with our autopilot top 5 choices that we made last year, and it did a little bit over 50% for the year, just buying awesome growth stocks. So until later, aloha, God bless everybody. Have a great rest of your week. We'll see you tomorrow. We're going to try it again on Instagram Live. Aloha.